A very good day to all of you guys. Welcome to the fifth mock exam answer discussion session, mock exam 5. So as always, we will start with the multiple choice paper and we will get through the 50 questions and discuss the answers. And then I will go to the second paper, the structured essay type question paper, and highlight a few questions that I think you guys need to bring a bit more focus and attention on. Right. So with that, without any further delays, let's get going. And we are going to start with the multiple choice paper. Okay. Right. So I will share the MCQ paper on screen with you guys. Hopefully by now you should be able to see the multiple choice paper on screen. Okay. Right. So question 1 focuses on resource allocation refers to the apportionment of resource allocation. Sorry, resource allocation refers to the apportionment of, is it consumer income, government revenue, raw materials? Raw materials is one type of factors of production, but the broader category is factors of production. Then finally, number 5, it says productive capacity. So as you guys know, resource allocation fundamentally as a from an economic point of view refers to allocating our scarce resources with alternative users and solving the basic economic problems of what to produce, how to produce, and whom to produce. So it is about allocating factors of production. So correct answer number 4. One of the differences between a social market economy and a free market economy is that in the former, that is in a social market economy, right? So it's a bit of a or relatively new economic system we talk about, social market economy, where instead of having a liberal or a free market economy, where the private sector has unchecked or uncontrolled freedom, where the government controls the freedom or the liberties of the private sector, and the government brings a very high degree of focus on social welfare, social equity, and make sure that every citizen is able to fulfill their basic human needs as well as protect their basic human rights. Right. So the correct answer here would be where high degree of emphasis on social justice and social protection. That is number 3 would be the correct response here. The diagram below shows the production possibility frontier for an economy at point A. The economy is producing good Y and good X. So at the moment they are producing 800 units of good Y and they are producing 100 units of good X. Okay. So what quantity of good X is given up to produce the potential output of Y? If they want to produce the potential output of Y, right? Now, how we look at this at the, I would say the margins of the production possibility frontier, that is the maximum of each product is, you have to now, for example, if we are producing 300 units of X, just I'm trying to explain the concept here. If you are producing 300 units of X, that means we are unable to produce when we produce 300 units of X, we are producing 0 Y. So the opportunity cost is whatever the maximum amount of Y we could have produced if we were only producing Y. So if we are only producing X, the opportunity cost is the quantity of Y that can be produced if we were only producing Y. Now here we are only producing Y. That is the potential output of good Y. No? That is, now there is no value number given here, which is not required to answer the question. So if we are producing at this point on the intersection of the PPF with the vertical axis, that is the good Y axis, how much of X are we producing? 0. If we had produced X, how much of X can we produce at maximum? That would be 300. So the correct answer is response number 2. Can we quickly check if that is the response I have given in the suggested answer also in the answer grid? Can someone quickly confirm that? Yes? Right. Great. So the correct answer is number 2, 300 units of good eggs. Okay. In the toolbox sessions also, I highlighted this way of analyzing. Right. Question number 4. On a diagram, right? On a diagram of production possibilities frontier, opportunity cost is represented by, on a diagram of production possibilities frontier, opportunity cost is represented by the slope of the production possibility frontier. If you want to be very technical, then it is the slope as we go downwards, right? As we go upwards along the curve, the slope is not showing marginal opportunity cost, but technically, the slope shows the marginal opportunity cost. It's not total opportunity cost, but the marginal opportunity cost. So the correct answer is number 1. Allocative efficiency means basically allocative efficiency focuses on considering social preferences, looking at marginal benefit, marginal cost, and then producing the particular good or service, right? Whatever the quantity society wants of that good or service, where MB equals MC. So correct answer then should be number 1, distribution of limited resources of an economy based on social preferences. But if you guys can't hear me clearly, if I become less audible, you need to quickly let me know. Okay? Right. Question 6. Which of the following items may generally represent derived demand? Basically, factors of production. Then, even though we don't consider money as capital or a factor of production, even money represents a derived demand. So here, out of the answers given, right, the ideal answer would be smartphones is generally a final good, right? It is not an input. Bus transportation, mobile data, voice packages, medical drugs for diabetes. So correct answer would be number 2. Microprocessors or semiconductors would be basically input. So it's coming under the category of capital, a factor of production, which has a derived demand. Which combination of factors are implied by individual demand for a given good? Implied. The consumer wants or is having a willingness towards a product, a desire for the product. Consumer has the necessary purchasing power or the ability to buy the product, and the consumer is planning to buy the product. So I think the first option captures all 3 of the implications, sometimes called the conditions of effective demand, sometimes called the conditions of effective demand. 7, answer 1. 8. Which of the following changes could decrease the real income of a consumer for a particular good while nominal income of the consumer is constant? What will decrease real income? For the real income to decrease, if the nominal income is not changing, then the price of the good has to increase. Price of the good has to increase. Now, if the price falls, real income will actually increase. We are looking for a decrease in real income. So that's incorrect. Increase in the price of a complementary good. When the price of a complementary good increases, demand for the good decreases. As a result, the equilibrium price will decrease. We are looking for an increase in price. Increase in price. So second answer is also eliminated. A reduction in the household taste and preferences towards a product will decrease demand. As a result, equilibrium price will decrease. We are looking for an increase in price. A reduction in the interest rates and rental charges applicable to the industry. Cost of production will decrease. Supply will increase. Market price will decrease. We are looking for an increase. An increase in the price of substitutes will lead to an increase in the demand, and thereby equilibrium or market price will increase, resulting in a decrease in real income. Correct answer, number 5. Question 8, number 5. Question 9. assume with regards to a product B, a decrease in market supply while nominal income of consumer is constant leads to an increase in the quantity demanded. Accordingly, it can be concluded that product B. So basically what has happened is market supply has decreased. So as you know, when supply decreases, supply has a negative relationship with equilibrium price. So equilibrium price will increase. As equilibrium price has increased, the quantity demanded for the product has also increased. Increase in quantity demanded. Yes. So the quantity demanded of the given product, so in this case, product B has also increased. So you guys can clearly see that both the price and the quantity demanded are increasing. So product B is ideally not only an inferior good, it's a given good. It's a given good. Now, here it says with regards to as the nominal income of consumer is constant. So when the price increases, right? When the price increases, what will also happen is the real income, RY will say, as price increases, real income decreases. Even though real income has decreased, the demand has increased. So income demand relationship is negative, inferior good. Price contra demanded relationship is positive. So it's a given good. It cannot be a luxury good or a demonstrative goods. Demonstrative good is what we call goods with a snob demand. Okay, so it's not even a good with a snob demand because those are normal goods. Right? Correct answer is given good. I hope that is the answer I have given. Then question 10. The inverse relationship between price and quantity demanded of a product, while factors other than price are held constant, is established in which of the following combination of events, right? So the inverse relationship between price and quantity demand of a product. So here we are looking at relative price, which is the substitution effect. The substitution effect is negative for all types of goods, that is normal goods, inferior goods, as well as given goods. Okay, so the correct combination we are looking for is it depends on the price change. Now, first option says change in price is to increase, then relative price this product compared to other products will increase, relative price not decrease. So that option can be eliminated because the second part is wrong. Second relative price change is wrong. Increase, decrease. So again, we can eliminate, right? This part is wrong. If the change in price is to decrease, relative price will also decrease. So that's correct. And because the product is cheaper, quantity demand will increase. Number 3 technically is correct. Number 3 should be the correct answer. The own price elasticity of demand is another way to refer to price elasticity of demand, PED. So it's a percentage change in quantity demanded divided by percentage change in price. So the correct answer there would be number percentage change in quantity demand. Yeah, number 3. Correct answer is number 3. Question 12. The table below shows the demand and supply of good X. Demand and supply of good X. Okay. So the demand and supply of good X is given in terms of a horizontal schedule. Normally we have the vertical schedules, but the information and the way of analysis basically is the same. So you are asked to estimate the consumer surplus at equilibrium would be. So to estimate consumer surplus at equilibrium, basically we take the maximum demand price, right? In this case, the maximum demand price, that is the price at which quantity demanded becomes 0. Prices are going from 10, 20, 30, 40, 50. The next price will be 60, right? And the QD goes from 5,000, 4,000, 3,000, so decreasing by 1,000, and this will be 0. So we now know the basically, we now know that, right, the maximum demand price is 60 minus, we need the equilibrium price. So you guys can clearly see at the price of 30, quantity demanded equals quantity supplied. So 30 is the equilibrium price. 60 minus 30 into equilibrium quantity is 3000. The entire thing divided by 2 or multiplied by half, we should be able to derive the consumer surplus at equilibrium. So once you solve it, basically you will get 90,000, 45,000 rupees, 45,000. Are we okay? Correct answer is number 4. Correct answer is number 4. Rupees 45,000. Question 13. Okay. We are simple question with the practice you guys have. Right. Question 13. In the short run, a firm's total product is increasing. Total product is increasing. Then it is if the total product TP or TPP is increasing. So the marginal product, while marginal product increases, total product will increase at an increasing rate. Even while marginal product is decreasing, total product is still increasing, but at a decreasing rate. So we might not be able to come to a conclusion marginal product is if total product is increasing, if someone says marginal product has to be increasing, that is technically incorrect. Marginal product could be increasing, could be decreasing. In that entire range, total product will be increasing, but at an increasing rate initially and then at a decreasing rate. So as far as I can see here, answer number 4 should be correct. Marginal product could be either increasing or decreasing. Right. If marginal product is negative, then the total product will actually decrease. So correct answer number 4. Question 14. In reference to the data in the following table, assume this perfectly competitive firm produces 5 units and sells a unit at rupees 40. Then the firm will. Okay. So if you look at, skim through the answers, if you just quickly go through the options given, it talks about shutdown price, it talks about profits, right? So I think what we have to do initially is to figure out if this firm is profitable or not. In other words, are they having an economic profit or economic loss? Then if they're having an economic loss, then we can start thinking, should they continue or shut down? That will help us derive the answer. So to estimate the profit or loss situation, the profit or loss of the firm, right? We will take TR minus TC. So TR would be they're selling a unit at 40 price or average revenue into they are selling 5 units. They're producing and selling 5 units minus total cost. Total cost at 5 units we can get from the schedule given here is 210. 210. So solving this will give us 200 here, 210 here. So they are making a loss of 10 rupees. Yes, they are making a loss of 10 rupees. So while making a loss of 10 rupees, should they continue or shut down? First answer talks about the loss correctly, but it says shut down production. So let's see whether they should shut down or continue. Now, if they, you guys can also see, yes. Okay, one of your classmates or one of your discussion mates is giving us the average variable cost also. Yeah, that's one way to go. There are 2 ways to get to the answer here, Buddha. I'll explain one method first and then we'll go to the other one. Okay. So you can see when output is 0, the total cost is 50. So this is TFC. What is TFC? TFC is also known as loss of shutdown. What is it called? Loss of, sorry, loss of shutdown. Sorry. If they shut down, they will anyway have to bear this 50 rupees. But if they continue, their loss is only 10 rupees. So that is one way to figure out that they should not shut down, they should continue. The other approach is, okay, so what we are saying is the loss is less than total fixed cost. That's one option. Or, as your friend has pointed out, the average variable cost is 32. Now, I'm sure you derived the average variable cost by taking 210 minus 50, that is the total cost minus total fixed cost. And this you have divided by 5. Am I right? Yes, that was the calculation. Okay. Right. There we go. So that will give us 32. I'm going to take the value given by our contributor, 32. And then we know the losses or the price they get. Basically, the price they get from the market is they're selling a unit at 40. So price is greater. In other words, AVC, and this is price or AR. So again, we can argue they should continue. Is that clear? So the correct answer then would be continue production shall necessarily face a loss. Answer number 4. Okay, answer number 4. Right. Then question 15. Which of the following is not a feature of perfect competition? What is not a feature of perfect competition? Number 1, price can be determined independently by each firm. Each firm is a price taker, not a price maker. Question 16. For an economy consisting of households, businesses only, which of the following consistent with the circular flow of income and expenditure? Which statement is consistent with the circular flow of income expenditure model and your knowledge about that particular model? Hopefully you guys will agree the correct answer here is 3. Third one. Households are suppliers of productive resources and firms are producers of goods and services. Any other answer you guys want me to explain? Let me know. Maybe perhaps an answer you have chosen, option you have chosen. What is not included in the measurement of gross national income? GNI. What is not included in the measurement of gross national income would be number 1, because this comes under the category of transfers. It's unilateral. There's no value addition. Assume in a question 18, question 17, answer 1. Assume that a hypothetical economy contains only 3 industries. Industry X using imported inputs of rupees 60 to produce an output worth 200. So if you take X, right, they are producing, because the end of the day, the question is asking how much is included in the gross domestic product. No? So that means we have to find the value addition, right? So X is the GVO, gross value of output is 200, but the intermediate consumption is 60, right? So their value addition is 140. GVA is 140. Then, so they sell this 200 million worth of output to the Y industry. Okay, so we can now start talking about Y industry. Using no imports, sells a part of its output to industry Z at 600. So they have sold part of its output, which is at 600 million, the value is 600 million, and further exports goods to a foreign country 120. So basically their total GVO, gross value of output, is not only 600 plus another 120, that minus they got 200 from industry X. 200 from industry X. So 600 plus 120, 720. 720 minus 200 is 520. Then we have industry Z. So they have got, remember, 600 from industry Y, and further they have imported another 60 of inputs. So their input amount is 600 plus 60, 660, and they are selling an output worth 1000 million. So 1000 million minus 600 from industry Y plus another 60 imported. So 1000 minus 660 would be 340. So if you add all this up, that is 140, 520, 340, you will get 1000. That is the sigma GVA value, right? Sigma GVA value that we will take to the GDP. If you go with the final value method, then you can take the 1000 as the final value and come to that conclusion. But we go with the value addition method. So correct answer, I'll leave the screen here for a bit. The correct answer is 1000 million. So in terms of the answers, it's answer number 2. Answer number 2. Correct? Right. Question 19, gross domestic product GDP. So this is a theoretical question. The direct meaning of, the conceptual meaning of gross domestic product based on the answers given. We like to practically define gross domestic product as the aggregate gross value addition generated within the economic territory by residential institutional units, which is at market price. But based on the answers given, the best answer we can choose is number 4. The sum of the total spending on final goods and services produced domestically during a given year. This is basically how we look at gross domestic product in the expenditure approach, which is known as expenditure on GDP. Expenditure on GDP. Question 20, net domestic product NDP can be NDP at market price equals. So net domestic product at market price. Remember, it's domestic product. So first option says domestic consumption plus domestic consumption is basically here we have C and G, domestic consumption. Net exports, Hari. So we add NX, which we need to take to convert it to GDP. And I was missing here. I is also there, right? Now here we took net exports and investment expenditure. Investment expenditure. So that means we are having the answer we get is not net domestic product. It should be gross domestic product. So we are getting gross domestic product, domestic consumption, expenditure, net exports, investment expenditure. Right. So the second one, consumption expenditure plus government purchases plus exports plus personal taxes. We are not going to end up with GDP nor NDP. Indirect business taxes, personal income taxes, net exports, minus depreciation, no. Gross domestic expenditure, GDE, plus net exports, meaning we are adding net exports twice. Is it? No. So here, I think we are onto something here. GDE plus net exports can GDP minus consumption of fixed capital. Correct answer number 4. Correct answer number 4. Any answer you want me to, any option you want me to explain further, let me know. Okay, the first one was wrong because we took gross investment, then the answer becomes GDP, not NDP. Right. Disposable GNI shall equal. Disposable GNI shall equal gross domestic expenditure, GDE, plus net foreign investments and net exports. So GDE plus net foreign investments is net exports. So now we have GDP. Okay, within brackets we have GDP plus BOP current account incomes. Incomes meaning we add net primary income from ROW. Then now we have GNI plus we add net foreign current transfers because it says incomes. We are adding primary income and secondary income. This is primary income and this is secondary income. Don't forget the requirement is not for GNI, disposable GNI. Yeah, first answer is correct. Any other answer you want me to explain why it's wrong? Or any other option? Let me know. First option is correct. Okay. 22. Right? 22. All of the following are considered in qualifying an economic activity into national accounts except which one? What is something we don't look for to say that it is included or excluded? Number 4, legality. We are not concerned about whether it's a legal, illegal activity. If an activity is illegal, it anyway gets exempted because no one reports the value. Get it? 22, answer 4. 23. If a print shop owner buys paper for rupees 3000, toner for rupees 400, uses these inputs and publishes books which are sold at a total value of 20,000, this print shop owner's contribution to the GDP. Basically, put calculate GVA, please. GVA. GVO minus IC. GVO 20,000, money value of the output 20,000. IC 2 items, 3,000 paper, 400 toner. So 20,000 minus 3,400, 16,600. Correct answer number 4. Correct answer number 4. Right. Next, we look at question 24. Which of the following is most likely to lead to an increase in aggregate demand? Most likely to lead to an increase in aggregate demand. Increase in savings will be a withdrawal, so that will weaken aggregate demand. Increase in imports is a withdrawal, it will weaken aggregate demand. Then increase in government tax revenue is a withdrawal that will weaken aggregate demand. An increase in the rate of interest will discourage investment and consumption spending. C and I will get discouraged and aggregate demand will decrease. So 1, 2, 3, 4 eliminated. Number 5, an increase in private investment spending. Correct. I, investment will increase. Following information is pertaining to a hypothetical economy in which the only source of government revenue is direct taxes, and net taxes shall equal basically taxes. Taxes and net taxes same, which means transfers are not there. Right. The requirements for you is to estimate disposable personal income and net exports. Okay. To estimate disposable personal income, we will take the GDP and we don't have net primary income from rest of the world. So, which means even though we are estimating disposable personal income, we will start with GDP, not GNI. Usually we start with GNI. So here we are going to start with GDP, which is 12,000. Right. From that, let's minus a few items. I can straight off see that there is gross investment, net investment, which means CFC can be found. That is consumption of fixed capital, which is not a part of personal income or household income. So I deduct that, we find that value. That would be gross investment of 6,600 minus net investment of 400. Net investment of 400, which means 1,200 is CFC. So CFC. Why are we minusing CFC? Because it is not a part of personal or household income, right? So with that, we end up with 10,800. Right. Then what else is required? Now what we have found is basically personal income, right? But we have to find disposable personal income, isn't it? So we have to minus the personal income tax element or the direct tax element. All taxes are direct taxes in this question, and there are no transfers to be added, right? So to find the direct tax element, what can we do? You're given GDP. Last item. Government budget balance is given. So the government budget balance is estimated by taking. So the budget balance is basically it's a positive value they have given government budget balance, right? T minus G. So the government budget balance is 60. We are trying to find T. G is given as 2,200. If the answer here is 60, right? So that means 60 plus 2,200 equals tax. So 2,260 equals the tax. All taxes are direct taxes. So you can say minus NT or tax, that is 2,260. Okay, 2,260. So from 10,800, if you minus 2,260, you will get 8,540. 8,540, which is disposable personal income. So disposable personal income is 8,540. So answer 2, answer 3, answer 5 are eliminated. Next, net exports. So how do we estimate net exports? Basically, the best way to estimate net exports would be you are given the GDP value. So from the GDP value minus the gross investment value minus the private consumption value minus the government purchases value. What is left is net exports. Could be a plus or a minus. Can you guys do that for me quickly? 12,000 minus 1,600 minus 8,000 minus 2,200. How much do we end up with then? Is it a plus or a minus value? It's a surplus or a positive value? Right, okay. So net exports is a positive of 200, plus of 200. So anyway, those are the answers given, but we have to go for the answer 1. Yes? Yep, answer 1. Correct answer is number 1. Are we okay? So I'll leave the calculation a bit there. Right. Next. Identify the statement which is correct in the context of analyzing price levels and movements in Sri Lanka. So if I go to the correct option here, it's number 3, right? If relative price levels remain constant, it necessarily indicates that absolute price levels are also free of any fluctuation. Hold on. Incorrect. There we go. Incorrect. Okay. Right. Yes. Correct answer should be number 3. That is what I have indicated in the schedule also. So that means 1, 2, and 4 and 5 are technically correct. Okay. So you can learn something from each of those options about analyzing price levels and changes. Question 27. With regards to a given economy over a period of 2021-22, the official consumer price index has increased from 150 to 165. Okay, index value has gone from 150 to 160, while the annual average nominal interest rate during this period remained at 8%. What is the real interest rate? Okay, to estimate the real interest rate, we need the nominal interest rate from which we minus the we need the inflation, nominal interest rate, and we minus the inflation rate. Nominal interest rate is given 8%. Now we have to find the inflation rate. Inflation rate. So to find the inflation rate, we are given the price index, so we can do that. So 165 minus 150 divided by, we started with 150. Yes, so divided by 150 into 100. Can you tell me what this is, or how much you will get if you do this calculation? Remember, we are simply trying to calculate the inflation rate. Okay, 165 minus 150 divided by 150, exactly 10%. Yes or no? Exactly 10%. What is 10%? The inflation rate. So the real interest rate is the inflation rate minus the nominal interest rate. The inflation rate is 10%, nominal interest rate is 8%. Actually, it's the other way around. We take the nominal interest and adjust it for inflation. Yeah, so it's nominal interest rate minus the inflation rate. 8% minus 10%, that gives us minus 2%. Minus 2% is the correct answer. Number 5. Number 5. Get it? Question 28. Which among the following will qualify as counter-inflationary fiscal policy decision? Counter-inflationary, to fight inflation in terms of fiscal policy. What can be done? So the correct answer would be counter-inflationary fiscal policy. Basically contractionary fiscal policy. Answer option 2. Contractionary fiscal policy. If you guys want me to explain any other answer, let me know. Any other option, let me know. Okay? We are looking for contractionary fiscal policy to control or reduce aggregate demand. Question 29. What is a change causing demand pull inflationary pressure within the economy? Demand pull inflationary pressure, where aggregate demand has to increase. So you have to justify, explain an increase in aggregate demand. I can see number 3, government expenditure increasing. Aggregate demand will increase, will cause demand pull inflation. Number 30. All of the following are possible economic costs of inflation, except which one? What is not a cost? Number 4. Okay, reduction in the rate of interest. When there is high inflation as a part of contractionary monetary policy, central banks tend to increase the inflation rates, their policy rates, and then the overall interest rate structure of the economy. But actually, low interest rate, keeping the interest rate at a lower level could be a cause of inflation. So this is more than an effect. This is a cause of inflation. Cause of inflation. Right. 31. Which of the following is most likely to be a reason for what economists refer to as the phenomenon of government failure? State failure, government failure. Okay. Technically, this is where the government comes into the market, practices intervention to correct market failure, but due to certain, we say, very inherent or very natural limitations the public sector or the government sector has, it leads to further worsening of that situation or what we call government failure. So here the ideal answer would be number 5, pursuit of self-interest among politicians, because then you're not making decisions based on the policy reality, or you're not making decisions based on the common interest that could lead to government failure. Okay. The other options given are all causes of market failure, not government failure. 31, number 5. 32. When consumption of a certain good generates positive externalities, which of the following must be true at the market equilibrium? At the market equilibrium, which of the following is true? Positive externalities. You can derive an answer for this question based on basically a diagram also, right? We have learned how to draw these diagrams very quickly. I assume I have given the correct answer as number 2. If someone can quickly check the answer grid also, please. Yes, where we have a situation where it says positive externality. So easy way to just keep this in mind, a tool that we have learned, and I will just remind you is, if it's a merit good, okay, that is where positive externality comes in. The marginal social benefit is going to be greater than the marginal social cost. The same thing we can reverse marginal private benefit. Cost side, the same thing we can say. The marginal private cost will be greater than the marginal social cost. If it's a demerit good, then what you will see is the marginal social benefit is lesser than the marginal private benefit. Marginal private, we'll keep the social on one side, then it's easy to remember, right? Marginal social cost, marginal private cost. Right. So marginal social cost, marginal private cost, marginal social cost will be demerit, marginal social cost is greater. Get it? So if you remember these things, easily you can answer. And a very simple number, if it's a demerit good, there will be a overproduction. Sorry, if it's a merit good, there will be underproduction. There will be a underproduction, right? So the deadweight loss triangle will be something like this. Okay? Sorry, will be, right? The deadweight loss triangle will be where we have underproductions. Yes? So, and then something like this. So if you want to even remember those, you can remember. Just remember, merit goods are underproduced, demerit goods are overproduced. Then easily you can figure these things out. Correct answer number 2. 33. Fiscal policy involves the government determining. Fiscal policy involves the government determining. Number 3. Taxation and government spending levels. In 2022, the pair of the largest, it says 2022. Your paper said 2022? Did it? Should have said because this is the paper that I'm having on the screen. Okay, so what you guys have to know is for 2023, and if possible, I've given you information for 2023, 4 as well. 2023 and 2024. Can you tell me in 2023 what is the correct answer here? For 2023, based on 2023, answer would be, you guys have studied this, right? Answer would be number, according to 2023, it should be, I'm getting two answers, 4 and 1. Let's see. 2023. I don't think it's 1 because excise duties cannot come before income taxes. Ne? But there's a small thing here. It says indirect tax revenue. That also you have to focus on, Buddha. Then this can't be there. Income tax. It's not an indirect tax revenue. So in that case, we will have to go with answer 1. Is that clear? In that case, we will go with answer 1. Right. Hopefully you guys are clear. Right. Okay. 35. Which of the following forms of government intervention could correct market failure? What is a intervention to correct market failure? Or would eventually lead to a correction of a market failure? Number 4. Granting of subsidies to goods which yield high external benefits. That is to encourage and close that underproduction gap that is there. 36. Which of the following is not a reason for international trade to occur among countries? Not a reason for international trade to occur. Number 5. The differences in money supply definitions doesn't lead to one country having low opportunity cost or another country having high opportunity cost. 37. The schedule below indicates the output in units, so output information of two products that can be produced equal number of, okay, most accurate statement based on this information. So if you look at the statements, second one talks about absolute advantage. So let's see if that is correct. It says India has the absolute advantage in coffee production. India produces less coffee than Sri Lanka, so they don't have. That's incorrect. Any other statement that only talks about absolute advantage? No. So we will have to estimate opportunity cost. Remember output information. So opportunity cost of producing clothes in Sri Lanka. I will always encourage you guys to quickly do these calculations clearly so that you can get to the correct answer. So if you take the two countries, Sri Lanka and India, and the two products, cloth or clothing and coffee, right? I'll just put the numbers, Puta. You guys give me the answers. Clothing in Sri Lanka, that means coffee divided by clothing. So it's 200 divided by 240. If I'm correct, incorrect, let me know. In India, it would be 180 divided by 200. Got it? Right. Then coffee, it will be 240 divided by 200. Here, it would be 200 divided by 180. So once you have got the values, we can reach our conclusion. For clothing in Sri Lanka, 0.8. Yes. For clothing in India, it's very close margin, 0.9 wage. Coffee in Sri Lanka, 1.2. And coffee in India, it's basically 1.1 something. Yeah. Right. So basically, if you compare the two products between the countries, right, you will see in this format I'm using, the comparison is horizontal. Sri Lanka has the lowest opportunity cost for clothing, whereas India has the lowest opportunity cost for coffee. So what is the correct answer then? Clothing, India, coffee. Second one. Is it? Yeah, should be, no? Answer number two. India has the absolute advantage. I've given the second one, is it? Is that what you guys are saying? Coffee. India makes 180, but Sri Lanka makes 200. So India has the absolute advantage. Is wrong. Yeah. So based on the calculation, the correct answer is number three. Isn't it? Number three, we can agree, no? The comparative advantage of producing clothing is held by Sri Lanka. That is correct. India holds a comparative advantage of coffee, Ekathari. Okay. Let me go back to the question. There should be some. Yes. Uh, Most inaccurate. Henang number two is correct. Right? Number two is correct. Could we have done this without the opportunity cost calculation? Yes, but if it's most inaccurate, there can be another answer which is more complete in terms of its inaccuracy. That possibility is there. But anyway, yeah. Okay, correct answer number two. Right? Second one is correct. Yes. Right? Unless there was another answer that says India has the absolute advantage in coffee and Sri Lanka in sorry, India has the absolute advantage in coffee and clothing both. If there's an answer like that, then that will be more inaccurate than the second one. Got it? But even then, we should be able to do this without the opportunity cost calculations. But anyway, we'll put it down to practice. 38. If country X has the absolute advantage in producing everything, absolute advantage in producing everything, so the theory simply says, the principle actually here says they should produce basically everything, right? Because that is the absolute advantage principle. Okay, theory says produce the goods you can produce the most output or the least input. The principle says only produce goods you have an absolute advantage. If you have absolute advantage in all goods, produce all goods. So I'm assuming I've given the correct answer as number one. 38. Yes? Right. 39, as a part of the workshop also, we did this question, if you guys remember. So I am hoping for a quick answer from your side. 39. But I have asked a question. Can you be specific with regards to which question is this? 38, is it? Ah, yes. Okay, 38. 38. Let me see. Trade will probably take place, but country X will be the only country benefiting. Uh, no, it's like this. Now, okay, I'll explain that. Then what is the other one? Yeah, for 38, there is no mutually beneficial trade. Is there an answer like that? Okay, you are saying all countries involved may benefit. Okay, it's like this. If you have noticed, Buddha, in most of these questions we have done for comparative advantage, right? When we look at the absolute advantage, we realize there is no basis for international trade because the absolute advantage for the product is held by the same country for both products. You get what I'm saying now? Even here, right? Even here in the question, we'll say, I'll take 37 as an example for now. In 37, Sri Lanka has the absolute advantage of clothing and Sri Lanka has the absolute advantage of coffee. Then the absolute advantage principle says Sri Lanka should only produce coffee and clothing and coffee should only be produced by Sri Lanka and India should not produce either clothing or coffee. Then what we say is then we have to come to a conclusion okay, there is no trade between India and Sri Lanka based on clothing and tea. But do we stop there? No, because absolute advantage is not a necessary nor adequate condition for international trade, mutually beneficial trade. So we go the next step and estimate comparative advantage. Once we estimate comparative advantage, we realize that there can be trade, mutually beneficial trade between Sri Lanka and India because Sri Lanka produces clothing at a lesser opportunity cost, whereas India produces coffee at a lesser opportunity cost. So just because there is no absolute advantage, we cannot come to a conclusion that there cannot be or there will not be mutually beneficial international trade. Is that clear? Again, that's the same argument on which I will eliminate the fifth answer also. Because you can't say only one country will benefit because we have only looked at absolute advantage. Once we look at comparative advantage, we can have a situation like you can see in question 37. Is that clear? You guys need to give me a response. Got it? So you can't eliminate the possibility of mutually beneficial trade based on absolute advantage. That is the point I'm making. Right. So 39, what is the correct answer, please? Because we did this question in the tool workshop. I'm not going to go into detail there. First one, yeah, right. 40. According to the principle, not accordingly, according to the principle of comparative advantage, the gains from specialization and exchange are optimized when the countries produce goods where they have the lowest opportunity cost. Should be number one. Hopefully, that is what I have given also as the correct answer. Yes or no? No? Yes or no? Right. Next, we have which country has the advantage of production X and can you So it says has the advantage. It does not specify comparative the absolute. So you have to clarify both. Okay? You have to clarify both. So if you clarify both, what is the answer you end up with? Always check for absolute advantage first, right? And that is a practice we have discussed in the workshop also. No? Country A product X 200, country Y only 160, country B 90 only 20. Yeah, I think country product, no, sorry, products are on this side, no. Country A X 200, B 90, ready, right? Yes, country A has the absolute advantage of both products. Is there an answer that confirms that? Ah, yes, number 3. Yeah, number 3 should be correct. Yes or no? 41, number 3. Okay. 42. 42. Sri Lanka's single largest export market and main import origin respectively. Number 1. Export market respectively in that order. So export market is USA, import origin is India now. Right. 42, number 1. 43. Which of the following arguments shall most likely justify protectionist trade policies? Justify. Give a argument for protectionism. What did you guys select as the answer? Sorry. Second one. Let's see. Protecting strategically important industries, and yeah, that's very strong argument for protectionism. Number 2. If the terms of trade of a country has improved, we did these questions in the workshop also. I think you guys now have the tool for that. Basically, go with the terms of trade formula, then it's easy, right? And understand it's price that is in the commodity terms of trade. And when they just say terms of trade, they are referring to commodity terms of trade. Okay. So it only looks at price, it does not look at value nor quantity. Value or quantity is not considered. What is the correct answer for the 44? Based on that knowledge. Number 4, let's see. Less has to be exported to buy. Yeah, basically import purchasing power of exports have improved with lesser units, less imports. Sorry, with less exports. I'll start one more time. With less exports, we can get more imports because our terms of trade has improved. Answer number 4 should be correct. 45. Which 3 of the following are the major industrial exports of Sri Lanka in recent years? Definitely A should be part of it. Tea and spices are not an industrial export, they are agricultural exports. Rubber products, yes, industrial exports. Petroleum products, yes, gems and diamonds, mineral. Yeah, it should include A. Then food, beverage, tobacco, yes, can be there. What have I given as the answer? The first one, food, beverage, and D, rubber products, yes. Petroleum products also are there. We do make petroleum products, but they're asking for the 3, right? So in that, or if you look at the top 3, then yes, A is Hari. Okay? Is that what is printed and given also? Hopefully, yes. Right. 46. Following presents indicators of country's performance, 2 periods, right? Volume of export index is given. Keep that in mind. Volume, not value. quantity of exports. Balance of trade is given in SDR currency. That doesn't matter here. Then exchange rate is given and the volume of import. Volume, again, quantity, right? So from 2020 to 21, what has happened is the quantity of exports have decreased from 100 to 90. Okay? But our trade balance has gone to a surplus, from a zero balance to a surplus. We are exporting less, but what has happened? Trade surplus is there. Then exchange rate hasn't changed. Exchange rate hasn't changed. And the amount of things we import has also remained the same. So we are importing the same quantity, but we are exporting lesser quantity. But at the same time, our trade balance has emerged favorable, meaning surplus. The only thing that can explain this is if export prices have increased. What has increased? Export prices have increased. Is there an answer for that? Is there a direct answer that says export prices have increased? No. Import prices increasing, this outcome will not be there. There's been a fall in export price. No, then we can't have a surplus here. We imported the same quantity. No change in level of real income per head. We can't comment on that. There is no information for that. Fourth one has been depreciation of the exchange rate. Exchange rate hasn't changed. Yeah, number 5. There has been an improvement in the terms of trade. Yes. Fundamental improvement in the terms of trade is export prices increasing, import prices decreasing. Right? So here the terms of trade has improved because of export price increasing. Number 5 should be the correct answer. What have I given as a correct answer in the grid? 5. Okay. Yes, we are clear on the logic. Right? It's very important to read those words, not value, it's volume. Right. The table shows alternative price elasticity of demand, exports, imports. If there is a depreciation of currency, combination of elasticity, favorable impact. Yeah. Marshall Lerner condition. Add them up and say, Puta, where the value is the greatest. Add the export price elasticity of demand and the import price elasticity of demand and tell me where the total is the greatest. Which option? I assume option number 5. Yes or no? Correct? No? Just looking at the absolute numbers. Right. So the correct answer is number 5. If the combined elasticity of exports and imports is greater than 1, we will benefit from a devaluation or a depreciation. So the further it's from 1, we will benefit more. I mean, more greater than 1. 47, answer 5. 48. Okay, you are given some BOP items. According to the information in the table, which of the following statements is correct? Okay, they are talking about surplus. Yes, current and capital merchandise. Okay. So given exports and imports, net services, net primary, net secondary. So 540 minus 620, then you get the trade balance. Yeah. How much is the trade balance? Or the trade deficit in this case? Yes. Trade deficit would be 60. Surplus. No, can't be a surplus, no? Negative. Trade deficit, right? Deficit 60. Right. Then is there an answer that has that? There is an answer I can see that says surplus. There's a trade deficit. No, there is a deficit. It says in the current and capital. That's wrong. What we are looking at is the trade deficit. So we have to move forward now, right? Putha, the 60 you are referring to is for the current and capital. I was, okay. Hold on. That's why I was wondering. I was asking for the trade balance. 80. Yeah, that should be 80, no? Yeah. Net services 80 minus 200. Okay, what is the current and capital account balance? Current and capital account balance, the deficit of 60. Is it? That is exports minus imports plus net exports plus net primary income plus net secondary income plus capital account net. එතකොට එන්නේ කීයද? How much do you end up with? Is it minus 60? Yes, I'm expecting you guys to do the calculation for me. Yes. Okay, minus 60. Right. Then answer is number 2. Okay. Just check if that is what I've given also in the grid. Okay. Australian government has donated 50 million US dollars worth of food and medicine to Sri Lankan government. How is this donation recorded in the balance of payment statement as per double entry system? Right? We have done this, I think you guys remember. So number 2 is what I can tell you. Yes, hopefully that is what I have given also as the answer. Number 2, 49. Which of the following combinations correctly identifies the correct amount and the facility obtained by Government of Sri Lanka from the International Monetary Fund, IMF, for the 17th occasion? For the 17th occasion. EFF 2.9. In dollars, yes. SDR product value. Yeah. Answer number 5. No, not 5. Extended fund facility. Yeah, SDR it's 2.9. US dollars it's 3. Number 2. Number 2. Okay? Number 2. Yeah. Right. SDR it should be less than 2.9. I would have given this to you guys somewhere in where we have talked about this. Okay? The SDR amount and the US dollar amount. Right. Correct answer, question 50, number 2. Right. Now, let me quickly take you through the SEQ paper also a bit. Right? Hopefully you can see it on the screen now. Right? So, as you guys know, productivity, entrepreneurship, these are big areas in your syllabus and especially for your examiner, right? So, therefore, I would always highlight these, right? Question 1, part 1 and part 2, okay? Be very thorough with these things. Then question 2, basic theory, we should be okay. Question 3, just be a bit good with part C, okay? Part 1, part C, economic depreciation, amortization. Okay? Right. Question 4, there are 2 questions from unit 4. Yeah, they should be standard. You guys should know. This question 5, part 1 is a bit of an interesting question. I want to see if you can theoretically explain it. Okay. why our GDP is a bigger value than GNI, even though we add NPI ROW. Right. Then part B, subsection B. I think this is an interesting question for you guys to answer. Question 6, part 2. Question 6, part 3, sovereign credit ratings. What are the criteria? All that is very relevant. Then the credit control instruments and part 5. Okay, part 5. So question 6, part 2, part 3 and part 5, I would want some extra focus. Question 7, the entire question is on the inflation concepts, right? And Sri Lanka's inflation experience. Question 8, again, your examiners are very big on this, salary tax incidents, economic tax incidents, those things. Part 5, public-private partnership, because we have a limited amount of funds. Government needs to get the private sector involved in different infrastructure projects. So that's always relevant. PPP, public-private partnership. That is question 8, part 5. Question 9, the international trade application question. Question 10. Yeah, part 4. Question 10, part 4. Okay. Question 10, part 4. Yeah, that's about it. So make sure you guys give those a bit of high importance, right? So, right. So with that, I will conclude the answer discussion session for the 5th mock exam paper. Okay. And so we will be doing 2 more papers, that is paper 6 and paper 7, which will be discussed in this approach or this method. And then the rest are given to you guys as take-home papers. So with that, I will conclude the answer discussion session for mock exam number 5.